Hey guys, just want to make a quick video on a Nasdaq outlook of what I'm gonna look for this coming week. So I'm gonna do a bit of a top-down analysis applying the smart money concepts and what we are looking for this week. So previously we've seen the market has been shooting to the downside. It has been bearish. It has been pushing down. And now we're anticipating a couple of reversals. As you can see, last week we had one strong engulfing candle forming, which indicated that we are getting some bullish momentum to the upside. Some strong bullish momentum to the upside. And then we're also currently at a very strong level of demand. So basically, when I'm trying to draw my demand levels, what I do is I look on the left and try to identify areas of consolidation. Areas of consolidation that form the base, sort of, because we use the rally base concept to determine our levels of demand and supply. So the rally base concept is basically where we have a rally to the upside, a bit of a consolidation, base forming up, and then a continuation rally, then a base forming up, and then a drop to the downside. Then we have another base, and then so basically the base is the consolidation point. The consolidation point is what we consider as a level of supply and demand. Reason being is, at that point is when we saw liquidity come into the market. So let's say, for instance, this was the consolidation, right? The market pushed up and then we had a consolidation. We know that a consolidation is a ranging area where we've seen equal buyers and equal sellers. But in this instant, we had a base form and then we had a continuation to the upside. So at this point is where we saw that, at this point, this is where the bullish liquidity came in. Hence, if price is going to come back to this area, we should expect the bullish buyers to come into play one more time, to push the market to the upside. Hence, we identify these as areas of supply and demand using the base. Yeah, so getting back to the analysis. In this case, I look at this area right here. As a level of supply and demand, and then let me try to find this area. So let me do this. So I'm gonna try to refine the area into something that's smaller and precise, right? So in this case, this is gonna be the base. As you can see here, we had a rally to the upside, and then we had a consolidation, and then a continuation. And as you can see, as our area of demand, price has retracted over 80% of the area. So that's a good indication right there. And then we have bullishness coming to play. So basically, I'm gonna build my confluence at this point, where I'm gonna look at a couple of things that's gonna help me anticipate a reversal. So the first thing is that we're at a very significant level of demand, right? At a significant level of demand on daily, and then also price is currently oversold. As you can see, price has been oversold since the 12th of April. It has been oversold since the 12th of April. So that's a good indication that we need to reverse. If price has been too oversold, we tend to push it to the upside. So let me try to show you a couple of times. And before that, do this. Price is oversold. So price is currently oversold, and now, so let's say, for instance, every time that we had a push to the downside, this is a push, this right here, we had a push, a swing to the downside, price was overbought at this point, right? Here, when we had this rally to the upside, price was currently oversold, and then when we had this drop, price was overbought. So that's how we use the overbought oversold stochastic. In this case, we look at whether price has been overbought oversold. So when price is in a ranging market, like it's in a range, it's just a significant level, we look at it whether it has been overbought oversold, which is at this point we saw that it was oversold. Hence, we had a huge spike to the upside. So we're gonna have a bit of a reversal until price goes back to the overbought. Probably we'll start anticipating reversals from there. Yeah, so that's how we use the stochastic indicator to analyze whether price is currently overbought or oversold, to help us determine significant levels of reversal. Yeah, so at this point, identify that, and then also identify the engulfing, indicating momentum into the market. So bullish momentum, So that's the bullish momentum that we see in the market. We see the engulfing. So I go on a lower time frame. So the higher time frame, I've confirmed a couple of things. I've got three edges that I'm looking at. The first one is the demand level being formed, and then the second one is that the market is currently oversold. You know, the market is currently oversold, and then we also have bullish momentum indication coming to the upside. Yeah, so I go on a lower time frame, which is a 4 hour in this case. So I also do analysis on the 4 hour, right? So I go on the 4 hour. I obviously try to identify what's happening on the swing. So this is the swing that we've had to the downside. This is the swing that we had to the downside. So I identify everything. So the first thing is I try to backtest my strategy. So in this case, what I mean I try to backtest it is that I try to go back in time and apply everything that I know to see how price has been adapted to the strategy at the line. So in this case, we had a change of character at that point of the swing, and then we had a break of structure here, and then we had another break of structure going down as the trend continued to the downside. Yeah, so there we have a break of structure, and then we have another break of structure right there, and then we have another break of structure right here, and then we have another break of structure right here, right? So as we can see, the lows have been broken continuously in this case. Hence now we're going to anticipate the highs being broken. So we try to identify the most significant highs that we have, and at this moment this is the most significant high. But bear in mind, we do have internal highs. We do have internal highs that we're anticipating price to, that we saw price shift in character, and hence anticipated bullish momentum. You know, so at this point we have, this is a significant level that I'll be expecting price to break to confirm that we're in a trend, because this might be just a retracement at this point from this level here. So let me do this from this supply level here, and price can just continue to the downside. So here, if price gets to break this high right there, if price gets to break this high, anticipating a reversal to this point, and then price shoots up. So remember, currently price is forming a base because it's consolidating between these two areas. It's consolidating between this high and this low. You know, when you go in the lower time frame, that's going to be more visible. But at this point, we're having a consolidation, and prices reach a significant level of supply that we're anticipating levels of reversal. So we try to go lower in the lower time frame. We try to see so at this point, this is the first high that we saw price breaking, right? This was the first high that we saw price breaking. This is an internal high. So we've got internal market structure and external market structure. Basically, external market structure is higher time frame market structure. Then we have lower time frame market structure that we also consider. So this was the first change that we saw, change of character, a bullish trend, right? So here there are a couple of levels that we might see price come to before it continues to the upside, or it might respect, you know. So this is the first level here, because this is the base. We had a consolidation at this point, but we had like a base where price pulled back a bit before it continued to the upside. So we're going a lower time, like the 1 hour. This is what we have currently. So we have price forming liquidity at this point. These equal highs, equal lows. So this is what we consider as liquidity. When price forms double taps in trends, when it forms trends and double taps, consider that as liquidity that might be potentially be grabbed going forward before price continues with the trend. Yeah, so here we figured out that price is currently at a demand level and engulfing, and it's oversold. And then on the lower time frame, which is where we anticipate potential levels of entry, right? So at this point we have these demand levels that I just identified that I'll be looking for potentially entering into a bullish trend. So this is my first demand level. And then we have the second demand level at this point, right? So we might see something like this where price grabs this liquidity down here and then continue to the upside, or it continues until this base, it pushes it upside. But then for me to get more bullish anticipations, I'll wait for price to break past this level right here, to break past this level right here. So if we don't break past this level here, I might anticipate more buys, I might anticipate more sales. So the reason why we entered sales early in the morning, because we figured that we are at this supply and demand level right here, and price was oversold, was overbought, on the higher time frame, on the 4-hour, and then we had more confirmations to anticipate the sale in the morning, hence we jumped on it. Plus it formed a gap when the market opened, so more reasons to why we entered the sale. Yeah, but at this point I'm more biased with the buys, though I'll have to wait for price to break this, because the market has been bearish for the longest time now, and yeah, let's see what the market is gonna do, because the market is currently dropping, and then crypto is dropping, and gold is dropping, so even the stocks are dropping. So basically there's high inflation and people are removing their investments. They're diluting their investments. They're getting their investments and transforming it into retail money. So that's why the market is currently dropping. That's from the fundamental perspective. But yeah, so this is my analysis for today. I'm anticipating reversals to the upside, but I'll wait for price to break past this. If price doesn't break past this, we'll look for sales to the downside to continue with the trend. Yeah, so that's about it. And I'll be dropping the course soon. Make sure on the lookout for the course, and hopefully you learn one or two things. Yeah, cheers. Alright guys, so this is a recap of the video of the course. I'm gonna go through the course and what we have in the course and what you can look out for in the course. So our course is currently stored on Google Drive. You can access it on Google Drive. So the first thing in the course, we have a free course where we publish a ton of free information and free books that you can use in PDFs, and a video on every basic that you might need to know in trading. And then we have the intro course. We have the intro course introducing you to SMC, to trading, and technicals and all that. And then we have SMC course right here, where we delve deep into the SMC course. We touch into everything that we use, from indicators to top-down analysis, where we look at supply and demand level, different types of market structure, different type of breakout structure, imbalances and order blocks and all those good things. And then we go into advanced course. So the advanced course, it's built on two pairs. So since we've specified our trading into NASDAQ and Euro USD, so we focus on Euro USD and NASDAQ entirely, and we have all the data points that we look at in terms of analyzing NASDAQ and Euro USD, from the fundamentals to the technicals, all top down. And then we have the mastery course. So the mastery course is it's a course that we created as LMG to help traders master different strategies and master trading in general. So one of the things that we included in the mastery course is exercise. We've included different exercises that we've backtested, we've tried out, we've applied over and over to help us gain consistency in trading. So you're going to find that in the mastery course. And then we've got LMG risk management strategies. We teach you how to be more conservative and aggressive on different accounts in different ways, and how to manage your money differently, whether it's investment money, it's your savings, it's debt, and different other sources of income into your trading. And then we've got psychological material. So this is a very interesting part. This is the part that I recommend everybody to have. So in the psychological part, we have different documents and different books that we've read to help us attain our psychology. And then we have sessions like psychological sessions, where we share videos with you guys on sessions and boot camps on where trading psychology was discussed. And yeah, if you watch these videos, these will be very, very helpful videos, and they are brought in detail, and they go from stage to stage, into your trading career. So yeah, it's quite an amazing module in the course. And then we have LMG trading tools. The LMG trading tools, these guys, they're top notch. They're top notch. These are one of the best tools that we've used and have given us consistency is the tools, LMG traded tools. So I'm happy to show you guys the tools. And then we also have the backtesting sheet. So under the backtesting sheet, I have backtested. I've sent a document, a full document of how we've backtested all the strategies, how we've applied all the strategies, we've backtested over the strategies and over time, and then how I've used them to win to pass our FTMO challenge and our verification team accounts. And then Profem challenge. So on a Profem challenge, it's a short module on how you can pass FTMO, how you can pass my FX fund, and then we show you how I pass my FX fund and my FTMO. Yeah, and then the live sessions one is just where we have a lot of live sessions, backtested live sessions, and all the live sessions that you can go to and see how we applied our strategies, how we looked at the market previously until now. Yeah, and then the last one, it's a very important module, LMG other strategies. So other strategies, it's a very interesting course. I included it all because I wanted to show you guys everything that we've learned as LMG. We've used different strategies to set on to set on SMC, so you guys will have a glimpse of all the other strategies that we use, like supporting resistance, break and retest, and moving averages and EAs, to see whether it's something that might interest you or not. So because most people don't find SMC as good, but I'm sure you guys will, because it's well in detailed in this course, and outline everything, simplified everything, backtested everything, give you enough information to show you that this is the holy grail. Yeah, so yeah, can't wait for you guys to see the course, have it all, and just send some feedback on what you think about the course and whether it's something that you think is gonna help you or not. Yeah.